Stop trading right now. If you think clicking a mouse is what makes you money, you have already lost before the opening bell even rings. Most aspiring traders suffer from a fatal misconception. They believe that to be a trader, they must be constantly involved in the action. They equate movement with profitability and silence with failure. But let me tell you the harsh truth that Wall Street veterans know but rarely share. The market does not pay you for your labor. It pays you for your ability to sit on your hands. When you are constantly in and out of positions, you are not trading. You are churning your account and feeding the broker commissions. The real edge creates itself in the silence between the moves. It creates itself when you have the discipline to watch a chart for 6 hours, see nothing that fits your specific criteria, and simply close your laptop without placing a single trade. That is a winning day. Cash is a valid position. In fact, cash is often the most profitable position you can hold because it protects your capital for the moment when the odds are overwhelmingly in your favor. If you cannot master the art of doing absolutely nothing, you will never master the art of trading.
Imagine a sniper lying in the tall grass versus a machine gunner spraying bullets blindly into the distance. Which one do you think survives the longest in hostile territory? In the financial markets, you are the soldier, and your capital is your ammunition. The amateur trader acts like a panicked machine gunner, firing at every shadow, every tick, and every minor price fluctuation. They deplete their ammo, their hard-earned money, before the enemy even reveals himself. By the time a high-probability target actually appears, they are empty-handed and defenseless. The professional trader is the sniper. They lie in wait, sometimes for days or weeks, completely, perfectly still. They control their breathing, they calculate the wind, and they wait for the target to walk into their crosshairs. They do not chase the market. They let the market come to them. This patience creates an asymmetric reward-to-risk scenario. The sniper only takes the shot when victory is nearly guaranteed, whereas the machine gunner relies on pure luck. You must decide today which soldier you want to be, because the market has no mercy for those who waste their ammunition on low-quality setups.
Casinos do not gamble. They engage in a business of probability, and that is exactly how you need to view your trading desk. Have you ever seen a casino pit boss sweating because a player won a single hand of blackjack? Absolutely not. The casino stays calm because they know that over a large enough sample size of hands, the mathematical edge, the house edge, will inevitably transfer the money from the player's pocket to the casino's vault. They are playing the long game, waiting for the law of large numbers to play out. Amateur traders, however, treat every single trade like it is a life or death situation. They try to force a win every time they sit down. Real trading edge is simply a statistical advantage that plays out over time. It requires you to wait for the specific setup where your probability of winning is higher than 50%. If you trade randomly or impatiently, you are the gambler in the casino. But if you wait patiently for your specific edge to appear, you become the house. You stop gambling and start operating a business where profit is just a function of time and discipline.
The number one job of a trader isn't to make money. It is to protect what they already have so they can survive to trade another day. This concept is counterintuitive to beginners who come into the market with dollar signs in their eyes, looking to double their account in a month. When you focus solely on making money, you invariably lower your standards for entering a trade. You start seeing patterns that aren't there because your brain is wired to seek rewards. However, when you flip your mindset to defense first, patience becomes your primary shield. By waiting, you are actively protecting your capital from subpar exposure. Every minute you stay out of a bad trade is money saved. Think of your trading capital like a block of ice on a hot summer day. Every unnecessary trade is like chipping away at that ice. If you chip away too much, you have nothing left to build with when the temperature finally drops. Patience allows you to preserve your buying power for the rare moments when the market effectively hands you money. Without preservation, there is no growth, only a slow bleed into oblivion.
The fear of missing out, or FOMO, is the silent killer that drains more trading accounts than bad strategy ever could.
It is that visceral, emotional pull you feel when you see a green candle shooting toward the moon and you aren't on board. Your brain screams at you to jump in, terrified that everyone else is getting rich while you sit on the sidelines. But here is the reality. Usually, by the time you feel that urge to chase, the move is already over. The professionals were the ones buying when the chart looked boring, way before the excitement started. When you succumb to FOMO, you are buying the professionals' exit liquidity. Patience is the antidote to this emotional poison. A patient trader understands that the market is an endless stream of opportunities. If you miss the bus, there's another one coming in 10 minutes. There is no such thing as a once-in-a-lifetime trade in the financial markets. By waiting, you detach yourself from the emotional hype and rely on logic. You learn to celebrate missing a move if it didn't fit your rules, rather than regretting the lost profit.
Not all trade setups are created equal, yet amateurs treat them all the same, throwing the same risk at a C-grade setup as they do an A-grade setup. This is a recipe for disaster. Professional traders categorize their opportunities. They have their A-plus setups, the ones that align perfectly with the trend, support, resistance, and volume. And then they have everything else. The waiting game is essentially the discipline to filter out the noise and only strike on the A-plus setups. Think about it. If you only took the absolute best trades that met every single one of your strict criteria, how many trades would you take a week? Maybe 2? Maybe 3? And how much higher would your win rate be? By waiting for the highest tier of setups, you drastically reduce your losses. The market is full of trap setups designed to lure impatient traders in during chop or consolidation. When you lower your standards just to feel the rush of being in a trade, you are voluntarily stepping into those traps. Elevate your standards, wait for the perfect alignment, and watch your equity curve smooth out.
You are obsessing over the price, but the professional is obsessing over the time. This is a fundamental shift in perspective that separates the wolves from the sheep. Novice traders stare at the price ticker, hypnotized by the up and down movement, thinking that every price point is a potential entry. However, seasoned veterans know that time is the true filter. Markets have rhythm and cycles. There are specific times of the day, like the market open or the London-New York overlap, where volatility and volume provide the push needed for profitable moves. Trading during the lunch hour or late on a Friday afternoon is often just gambling in the mud. Patience involves waiting not just for a price level, but for the right time of day when the smart money is active. If the price hits your level, but the time is wrong, the trade is often invalid. It is about syncing your activity with the institutional flow. If you can learn to sit on your hands during the dead zones of the day, you avoid the chop that destroys so many accounts. Time is your filter. Let it do the work for you.
If your trading feels exciting and gets your heart racing, you are probably doing it wrong. Real, profitable trading is incredibly boring. It is repetitive, it is methodical, and it involves a tremendous amount of waiting. Hollywood has sold us this image of traders screaming into phones, smashing keyboards, and living on the edge of adrenaline. The reality of a successful professional is sitting alone in a quiet room, drinking coffee, and staring at a chart for 4 hours, waiting for an alert that might never trigger. If you are looking for entertainment, go to the movies or buy a video game. The market is not there to entertain you. It is there to transfer wealth. When you accept that boredom is part of the job description, you stop trying to manufacture excitement by overtrading. You learn to embrace the dull moments because you know that is the price you pay for the financial freedom you want. Embracing boredom is a superpower. It means your emotions are regulated, your dopamine is in check, and you are operating like a cold, calculated execution machine rather than a thrill seeker. Imagine you only had 5 bullets to fire for the entire trading month. Once you pull the trigger 5 times, your trading platform locks you out until the next month begins. How differently would you trade? Would you waste a bullet on that questionable breakout that looks a bit overextended? Would you fire a shot just because you were bored? Absolutely not. You would analyze every potential target with extreme scrutiny. You would check your checklist 3 times. You would wait until the target was so close and so clear that missing was statistically impossible.
This hypothetical constraint creates the ultimate discipline. While you don't literally have a 5-trade limit, you should trade as if you do. Overtrading is simply the result of having unlimited ammunition and no discipline to conserve it. By artificially limiting your frequency, you force yourself to filter for quality over quantity. The goal isn't to be busy. The goal is to be right and to be profitable. Adopt the 5-bullet mentality, and you will suddenly find that your patience pays off in a massive increase in your average return per trade.
A sailboat cannot move without wind, yet traders try to force profits in a dead market every single day. The market cycles through phases: trending, ranging, and high volatility chop. Your strategy likely only works well in one of these conditions. A trend-following strategy will get shredded to pieces in a tight range, and a mean reversion strategy will get run over in a strong trend. The waiting game is largely about identifying the current market condition and having the patience to stand aside when the conditions do not favor your playbook. If the market is choppy and directionless, the best trade is no trade. It is the ability to say, the water is too rough today. I am not setting sail. Most traders lose money not because they don't know how to trade, but because they don't know when not to trade. They try to impose their will on the market, demanding profits when the market has nothing to give. You must be humble enough to wait for the wind. When the conditions align with your system, trading feels effortless. When you fight the conditions, it is a constant losing struggle.
Einstein called compound interest the 8th wonder of the world, but he forgot to mention that it requires patience to work. Compounding is the engine of wealth, but it starts slow, painfully slow. In the beginning, your gains seem insignificant. You make a few percent and the dollar amount barely buys you a nice dinner. This is where most traders give up or get reckless. They get impatient with the slow growth and start increasing their leverage to speed up the process. They try to get rich quick and end up blowing up their account. Patience is understanding the exponential curve. If you can consistently make small, boring gains and wait, the curve eventually goes vertical. It isn't about hitting a home run on day one. It's about hitting singles every day for a decade. The patience to let your account grow organically without forcing the issue is what separates the wealthy from the dreamers. You have to trust the math. You have to be willing to be small for a while so you can be massive later. Don't interrupt the compounding process with impatience and greed.
Your bank account isn't the only thing you drain when you overtrade. You drain your emotional resilience, which is arguably more important. Every decision you make consumes mental energy. Every time you enter a trade, watch the P&L swing, and stress over the outcome, you are spending emotional capital. If you are taking 20 trades a day, you are exhausting your decision-making faculties. By the afternoon, you are suffering from decision fatigue, and that is when the big mistakes happen. That is when you break your rules. Patience preserves your emotional capital. By waiting for only the best setups, you keep your mind fresh and sharp. You enter the trade with confidence rather than anxiety. You can handle the stress of a position because you haven't wasted your energy on 15 meaningless scalps earlier in the morning. Trading is a performance sport, and mental fatigue is the equivalent of a pulled muscle. You cannot perform at a high level if you are mentally burned out from overengagement. Protect your mind by waiting. Trade less, trade better, and keep your emotional tank full for when it really matters.
There is a massive difference between being frozen by fear and actively waiting for your edge. Some traders hesitate because they are scared to pull the trigger. That is analysis paralysis, and it is a flaw. But active waiting is a strategic choice. It is the predator stalking its prey. Active waiting means you are fully engaged. You are analyzing the charts. You are drawing your zones. You are watching the news feeds, and you are ready to strike the second your criteria are met. You are not passive. You are coiled. The amateur looks at a waiting trader and thinks they are doing nothing. The professional knows that the waiting trader is doing the heavy lifting of analysis. When the moment comes, the execution is instantaneous because the decision was made hours ago during the waiting period. Do not confuse hesitation with patience. Hesitation comes from a lack of confidence. Patience comes from an abundance of discipline.
You must cultivate the aggressive patience of a hunter, still on the outside, but sharp and ready on the inside. That is the state of mind where profits are made. Mastery isn't about how many trades you take, but how many market cycles you survive and observe. We have all heard of the 10,000-hour rule for mastery. In trading, people assume this means 10,000 hours of clicking buy and sell buttons. Wrong. It means 10,000 hours of screen time, much of which is spent observing, analyzing, and waiting. You need to see how the market reacts to news, how it moves during a crash, how it grinds during a bull run, and how it chops during the summer doldrums. You cannot speed this up. You cannot force experience. A doctor doesn't become a surgeon by rushing through medical school. They have to put in the years of study. Patience in your career trajectory is just as important as patience in a single trade. Give yourself the grace to be a learner. Stop trying to retire next week. Accept that this is a profession that takes years to master. If you are patient with your own development, you won't feel the pressure to force trades to prove your worth. You are building a career, not buying a lottery ticket. Smart money needs liquidity to enter positions, and impatient retail traders provide that liquidity. Understand the ecosystem you are in. Large institutions, banks, hedge funds, market makers cannot just click buy and fill a billion-dollar order. They need someone on the other side to sell it to them. They need liquidity. So what do? They manipulate the price to induce impatience. They create false breakouts to trap eager bulls. They flush support levels to panic eager bears. When you trade without patience, you are reacting to these manipulations. You are selling when they want to buy and buying when they want to sell. You become the food for the sharks. By waiting, you refuse to play their game on their terms. You wait until the institution has revealed their hand, until the true direction is established, and then you ride their coattails. You stop being the liquidity and start being the parasite on the back of the whale. It's a much safer place to be. Let the impatient sheep get slaughtered. You wait until the wolves have moved, and then you follow the path they cleared. Your trading journal tells a story, and usually it's a tragedy about impatience. If you look back at your last 20 losing trades, I guarantee a significant portion of them were taken because you were bored, tilted, or impatient. You didn't wait for the candle close. You didn't wait for the retest. You jumped the gun. A powerful exercise is to journal your waiting. Write down every time you wanted to take a trade but stopped yourself because it wasn't quite right. Track the money you saved by not trading. This shifts your psychology. You start to see non-action as a profitable activity. When you review your journal and see that patience saved you from 5 losses in a row, you reinforce the behavior. You need to gather data on your own discipline. Prove to yourself, on paper, that waiting pays. Most traders only track their executions, but you should track your restraint. Give yourself a score for patience every single day. Make it a metric you track just as closely as your profit and loss. What gets measured gets managed, and you need to manage your impulse control. Trading is just a numbers game, but the numbers only work if you let the sample size play out over time. A coin flip is 50-50, but you could easily flip heads 10 times in a row. If you bet everything on tails and lose, you claim the coin is rigged. But if you flip it 1,000 times, the ratio will smooth out. Your trading edge is the same. It is a probability distribution. You might have a 60% win rate, but that doesn't mean you win 6 out of every 10 trades. You could lose 10 in a row and still be a 60% winner in the long run. Patience is the trust in that long-term math. It is the ability to endure the losing streaks without changing your strategy or losing your mind. If you are impatient, you will abandon a winning strategy during a normal drawdown period. You will jump from system to system, never giving the probabilities enough time to work in your favor. You must have the patience to let the law of large numbers smooth out your variance. Stick to the plan, even when it hurts. The choppy middle of a trading range is where accounts go to die a slow, painful death. Markets spend a lot of time consolidating between support and resistance. The edges are where the opportunity lies, buying at support, selling at resistance. But the middle? The middle is noise. It is random. It is a coin toss. Yet, impatient traders love the middle. They see a little green candle and think breakout, or a little red one and think breakdown. They get chopped up, buying high and selling low within a meaningless range. Patience is the discipline to sit on your hands while price is in the middle of nowhere. It is the refusal to engage until price reaches a key level of interest. It is like waiting for a pitch in baseball. If you swing at everything in the dirt or over your head, you strike out. You wait for the pitch right over the plate. In trading, the plate is your key level. Everything else is a ball. Don't swing at balls. Let the price travel to the edge where your risk is defined and your reward is potential. Stay out of the meat grinder. You cannot force the market to give you a weekly paycheck like a corporate 9-to-5 job. This expectation is the root of much impatience. In the corporate world, you trade time for money. You show up, you wait out the clock, you get paid. In trading, you can show up for 40 hours and lose money. The market owes you nothing. Some weeks will be windfall weeks where you make a month's salary in a day. Other weeks will be dead with 0 valid setups. If you approach trading with a paycheck mentality, expecting to make a fixed amount every day or week, you will force trades when the market is barren. You will try to squeeze water from a stone. You must adopt a hunter-gatherer mentality. You hunt when the game is plentiful and you conserve energy when it is winter. You need to have the financial patience to handle the variance in income. Build a buffer so you aren't pressured to trade to pay the rent. The moment you need to make money from the market today is the moment you start losing it. Detach from the daily outcome. Revenge trading is the desperate attempt to get back what you lost, but it always digs a deeper hole. It is the ultimate form of impatience. You take a loss, you feel the sting to your ego, and you immediately want to fix it. You want to erase the feeling of failure. So you jump back in, usually with larger size and less confirmation. This is emotional suicide. The patient trader takes a loss and walks away. They accept that the money is gone. They wait for their emotional baseline to return to neutral before they even look at a chart again. This cooling off period is crucial. Patience allows you to reset. It allows you to view the next trade as completely independent from the last one. The market doesn't know you just lost money. It doesn't care. If you carry the baggage of the last trade into the next one, you are trading your emotions, not the market. Learn to sit with the discomfort of a loss without acting on it. That ability to sit still while hurting is what saves you from the catastrophic blow-up days.
Show me a trader's morning routine, and I will predict their longevity in this game. The impatient trader rolls out of bed 5 minutes before the open, chugs a coffee, and starts clicking buttons. They are reactive. The patient trader has a ritual. They wake up early, they exercise, they meditate, they review the overnight news, and they mark up their levels hours before the bell rings. This routine grounds them. It puts them in a proactive state of mind. They have already identified exactly what they are waiting for. If price does X, I do Y. If it does not, I do nothing. That is their mantra. By preparing, they remove the impulse to improvise. Patience is a byproduct of preparation. When you know exactly what you are looking for, you are not tempted by things that don't match the picture. If you are winging it, everything looks like a trade. Structure your day to support your patience. Build habits that slow you down and force you to think before you act. The battle is won in the morning prep, not during the trading hours.
Faith in your system is the only thing that keeps your hands in your pockets during volatility. If you don't trust your edge, you will be impatient, you will doubt, you will second guess, and you will try to outsmart the market. But if you have back-tested your strategy, if you know the data, if you know that setup A has a 70% win rate over the last 5 years, then waiting becomes easy. You aren't waiting in the dark. You are waiting for a certainty. You know the bus is coming. The anxiety of waiting comes from a lack of conviction. Build that conviction through study and testing. When you truly trust the process, the outcome of any single trade stops mattering. You become a casino owner who knows the math is on their side. You don't need to force a win today because you know you will win the year. Patience is simply the physical manifestation of trust. Trust your work, trust your rules, and trust that the market will eventually pay you for your discipline. Without trust, patience is impossible. With trust, patience is effortless.
In a world of high-frequency algorithms, your human ability to sit on your hands is your superpower. You cannot beat the computers at speed. You cannot beat them at calculation, but you can beat them at discretion. You can choose not to play. The algorithms have to trade. They have mandates to provide liquidity. You do not. You have the ultimate power, the power of the sidelines. This is your real edge, the ability to wait for the perfect storm, the perfect alignment, the perfect moment where the odds are so heavily stacked in your favor that it feels unfair. Trading is a transfer of wealth from the impatient to the patient. It is that simple. The market is designed to separate you from your money through confusion and emotion. Your patience is the wall that protects your capital. So slow down, breathe, wait for your pitch. The market will be there tomorrow, and it will be there in 10 years. The only question is, will you? If you master the waiting game, the answer is yes. Patience isn't just a virtue. In trading, it is your salary.